Disclaimer: this is for educational and entertainment purposes only. This is not any sort of financial advice. It is important to do your own research. The information is not intended to be used as the basis of any investment decisions by any person or entity. This information does not constitute investment advice, nor is it an offer or a solicitation of an offer to buy or sell any security. Welcome back everyone to Dream Investing 101. The start of the week had been strong for the market, especially for the tech, where the Nasdaq was up almost 1% on the end of Monday. One important piece of information to keep in mind is that China's economy had barely grown in the second quarter from the first quarter, and youth unemployment had hit a record high in June. What this means is that a decline in China's economic stability can put some sort of pressure on the global economy, causing the fears of recession to increase. However, the major U.S. market stayed resilient on Monday due to the encouraging reports on inflation and bank earnings. Strong bank earnings from Wells Fargo, which reported a 57% jump in profit, helped kick the week off to a strong start. One thing to also keep in mind is that the Fed is expected to continue raising interest rates at its meeting next week. Analysts do have different takes on the current situation of the market. One analyst believes that the stocks could still have room to run if inflation continues to ease down, while another analyst believes that the earnings results will help dictate the trend of the market. Regardless, based on the chart for QQQ and Nasdaq, the stock has broken up above the resistance point, indicating a strong bullish high-probability momentum. Morgan Stanley have reported earnings on Tuesday, and their second quarter profit had fell 13% from a year ago. JP Morgan and Citigroup also reported drop-offs in trading and investment banking. However, Morgan Stanley results have topped analyst expectations with strong gains in their wealth management division. JP Morgan reported blockbuster profit gains as well. Bank of America had also reported a 19% increase in net income from a year ago. Furthermore, Microsoft has made a huge announcement for their upcoming plans for several new initiatives to sell AI-powered products to both consumers and businesses. The share prices for Microsoft had soared on Tuesday after they announced the pricing for their Microsoft 365 artificial intelligence subscription service. A number of regional banks like U.S. Bancorp, M&T Bank, and Citizens Financial Group have reported that deposits stabilized in the second quarter, which cooled off investors' concerns that getting additional loans for businesses and families would be harder. Goldman Sachs had posted a drop in quarterly profit. A strong earnings season will assure investors the case for a soft landing scenario. So far, the financial sector has been cooler for the market. Along with the declining inflation, the market has been able to post solid gains for this quarter. However, traders are looking at another quarter percentage point interest rate hike from the Fed next week. Investors and traders are hoping that the Fed will end the series of rate increases without possibly spurring a recession. Netflix had released their earnings this past week, and the company's revenue had fallen short of the anticipation made by the analysts. Tesla had also reported their earnings, and CEO Elon Musk had said that the vehicle production would slow during the third quarter to shutdowns for factory improvements. Throughout 2023, the stock market gains have been driven by a small group of mega-cap tech stocks like Tesla, which means that the biggest companies will have a stronger influence on the index performance than other small and medium-cap companies, in which this will make the indexes more vulnerable to pullbacks if a few heavy-weighted companies experience a fall. The upcoming week, big-name tech companies like Alphabet, Microsoft, and Meta will be reporting their earnings. In the economic data that was released on Thursday, the U.S. jobless claims data signaled the labor market remains tight. Technical analysis. Now let's get into the chart analysis for the QQQ on a daily time frame. The QQQ had a grade up until Thursday, where the tech-heavy Nasdaq fell more than 200 basis points on Thursday. Though the QQQ has had a large drop of more than $10, the QQQ is still trading above the $372.50 resistance level. A slight pullback in a strong bullish market, driven by strong earnings, is very healthy. The $372.50 level can act as a support point for traders to buy back on if the QQQ falls back around their range. Next week's earnings as well as the Fed meeting can be extremely pivotal in shaping the trend for the market. Microsoft has also been very popular on the news lately. The share price has touched the $364 price point and then bounced below the $350 resistance level. Keep in mind that Microsoft will be reporting their earnings next week. The share prices have crossed above the $350 resistance level and then dropped back. The share prices are trading very near the resistance point, making it as good as a support level right now. It will be very important to watch next week as to what will happen to the share prices, because Microsoft has crossed the very strong resistance level of $350. The probability does seem high on the shares crossing that level of resistance again. Many factors next week can be a big influence on the stock, which is why traders will be closely watching the $350 range closely for the stock. Lastly, let's take a brief look at the DJX, which is the Dow Jones Industrial Average. The DJX has been extremely strong this week. Compared to the tech market, the Dow has been very resilient and strong. As the stock price is gaining momentum, there does seem to be a resistance level at $354. Traders will be watching that price point to see if there is a strength at that level to propel higher or if the share prices cannot manage to break past that point and see a pullback. Thank you so much for watching this episode on Dream Investing 101. I hope you enjoyed it. Please be sure to like and subscribe. Thank you.